I want to go to Japan because we haven't talked about that enough this hour, Paul, and I think this is fascinating. We've taken out the 1989 peak on the Nikkei. You know, this takes me back to the days of Walkmans and my childhood, Paul. But the markets have more important things to think about. I mean, this has been tipped over the edge, if you like, by NVIDIA, but the founding blocks for this laid, I mean, 10 years ago in some cases when you're thinking about reform. What do you make of the new records in Japan?
Yeah, well, it seemed almost a matter of time or an inevitability that we were going to get there, given the momentum that we've seen in the Japanese market this year, seeing inflows coming both from abroad and from domestic investors, which have a new sort of retirement savings plan they can put money into, which is getting them more excited about the stock market as well. I think, you know, kind of some elements of the rally have been long-term reforms that have cleaned up the corporate picture somewhat, have been very encouraging for investors, brought in active investors, got money flowing off balance sheets that have been held up. We had things like the endorsement of Warren Buffett as well, giving the market that extra kind of lift and boost. And now that inflation is catching on in Japan, and actually we discovered that companies have pricing power and are able to raise their prices without hurting their margins because there's still demand there, the rally is continued to gather steam. And so, you know, a lot of the strategists are saying this is a stopping off point, but this isn't the end of the rally. There's scope for plenty more gains from here. Japan is still under-owned relative to global portfolios. The alternative over there in China isn't looking so hot either right now.